Listen up, Canadian business owners. The June 30th filing deadline for corporate taxes is coming up. I don't want you to miss out of any of these expenses that I'm going to go through in today's video. If you're new here, my name is Alice and I'm a CPA. I discuss personal finance, digital marketing, and some other life improvement stuff on this channel. Let's go over all of the common business expenses that may be applicable to you this year. Let's start with where you work. So if you work at home, the CRA will allow you to deduct home office expenses if two criteria are met. The first is if your home office is your principal place of business, meaning you don't have another physical office location, or you use the office space to earn an income where you meet your clients, customers, patients. If you meet any one of these criteria, you can deduct certain expenses associated with your home office. So this can be maintenance costs such as heating, house insurance, electricity, property taxes, mortgage interest, and capital cost allowance. Any of these costs need to be prorated to the total area of your home. So if your office is 200 square feet, and your house or where you live is 2,000 square feet, then you can prorate all of the costs that I just mentioned by 10%, 200 divided by 2,000. And you can expense that portion for your home office. Now, if you have a lease and you have a physical office or a physical location that you work out of, then you can expense all of the costs associated with that location. If you own the building, if you own the commercial building or property that you work at, you can also deduct the mortgage interest off of it as well. Meals and entertainment. So 50% of the meals and entertainment expenses that you incurred for the purposes of business can be expensed. For example, you take a client out to lunch. It's a business lunch. It costs $100. Make sure you keep those receipts because they can be claimed and you can expense $50 of that meal against your business. Speaking of entertainment, the CRA does not classify golf as an entertainment expense, so green fees cannot be deducted. You can deduct any interest charges or bank charges related to your business. So if you incurred any interest on money that you borrowed for business purposes, so say you have a loan under your business, okay, or you have a bank lien or line of credit under your corporate name, then the interest on that loan can be expensed. This also goes for any monthly bank fees that you pay, credit card processing fees. Those are all deductible. Office expenses incurred for the purposes of business. So your printer, your stapler, printer paper, pens and pencils, office chair, legal and accounting fees. So any legal fees that you paid to your notary or your lawyer in the calendar year, so that would be January 1st to December 31st of last year. This would include any incorporation costs if it's your first year of business, any annual filing dues, those can all be expensed, as well as any accounting fees. So if you use a bookkeeper or an accountant or somebody to help you file your taxes, any money that you pay to them that they issue an invoice for you in return can be expensed. If you self-file your business tax return using a program such as TurboTax, that amount can also be expensed under the business. Motor vehicle expenses. Now there's a couple different rules here, but if you use your car for business, you can deduct the prorated portion of your expenses based on how much you drive by kilometers. That was a bit of a mouthful. But for example, if you drive your car for 20,000 kilometers a year, 5,000 of those kilometers were used for business, then you can deduct 25% of the expenses related to the car. Fuel, insurance, lease, repairs and maintenance. If you finance the car under the business rather than lease, then you can claim capital cost allowance based on the price of the car. Now, I have another video on leasing and financing cars in general. This is more from a personal finance perspective, but I also talk about the tax consequences as well. I encourage you to check that video up top. I'll leave it right here. Capital cost allowance. So in Canada, anything that is capital in nature should be capitalized rather than expensed. What this means from the tax perspective is that you have to sort of like divvy up the expense over a couple of years. So if you buy a computer that's $2,000, the CRA would consider that to be a capital asset, which means that you can expense that $2,000 for business purposes, but it has to be over a certain time frame that the CRA prescribed. Now, the CRA has a very long list of capital asset classes that's dictated from the Income Tax Act. There's no hard value on the dollar amount between what should be capitalized and what should be expensed, but most accountants Okay, most accountants in Canada would say that $1,000 is a general good rule. Okay, so if you buy a light bulb for your home office, technically that light bulb is capital in nature because the benefit of the light bulb can be realized over a period of years. But because a light bulb is only $10, technically capital in nature, but just using judgment and discretion here, it's not really material enough for us to capitalize a $10 light bulb over 5 years. That'd be $2 every year. So generally speaking, the rule that most accountants use is $500 or $1,000, depending on the size of the company. If you have any questions about this, make sure that you ask your own accountant what a good dollar threshold for capital assets is. Lastly is salaries. So any salaries that you paid to your employees or you paid to yourself are tax deductible. If you paid any dividends to yourself in the year, those are not tax deductible. There is a separate tax treatment for dividends. So salaries would include base salary as well as the employer's portion of CPP and EI. If you found this video helpful today, make sure you check out my video on T2 corporate tax return. I walk step by step through the entire T2 corporate tax return and all of the schedules to explain how you as a business owner can interpret your own tax return. And if you enjoyed this video today, please hit the thumbs up, turn on the notification bell, and subscribe to the channel. I will see you guys in the next video. Until next time.